Hey traders, Akil Stokes here, Chief Currency Analyst at TradingPower.com, and welcome to another weekend review video. After taking a week off, I'll tell you what, I am fired up to have another video for you guys, mainly because there's a comment that was left under my last video that I just wanted to spend some time responding to. Now, I'll probably go on a little bit of a rant. I don't know how long it's going to be. I told you I'm a little fired up off this comment, but after I'm done, we're going to talk about the euro dollar, something that has happened, and I'm going to walk you through some analysis on what I think could be in store for the future. So just hold tight for that, but I want to address this issue, and I'll apologize in advance for putting the person out there who, no, I won't apologize. You know why? As a public figure, I take a lot of heat. Everything I put on social media, Twitter, TradingView, Facebook, is open for criticism. And I get hammered a lot. So you know what? If you're going to respond to something on a public platform, there's no shame in me talking back to you. But it was a message from a trader here on YouTube after my last video. And basically he said that my videos are a honey pitch for gamblers, newbies, and losers. I hope you see what you're doing here. He says your videos instigate and motivate the uninitiated by making it look too simple. But someone who is barely making money trading Forex, as you mentioned in some of your videos, you know that's not the case. In my humble opinion, you should focus on psychology way more than you do and make them understand that no matter how simple or accurate a system is, without a particular mindset, they will lose and they will be left with nothing but a ton of wasted time and possibly money. You have too many followers, and that makes too much money waiting to be lost. You know what comes with great power? In my 2 cents. And first of all, I want to say this, guys. If you're gonna leave a comment under my videos, make sure you do your homework first. I'm not even going to address the not making money part. I don't think that needs to be addressed. But I have over 100 videos on YouTube. I don't know how many seminars I've done. If you look at every single one of them, the main thing I say, psychology is the holy grail. I'll say it again. I'll look you right in the eye and say it. Psychology is the holy grail. That is what I preach the most. Again, during my free videos, in my live trading room, in the syndicate program, psychology, psychology, psychology. In fact, we've been going through a drawdown over the last 2 weeks, and we've been hammering psychology even more. So if you're going to comment on my stuff, do your homework first. Join me in the live room. Join the syndicate. Watch more than this one video. All right? Think before you type. Think before you hit that send button. Do your homework first. I told you guys a little fired up. I'm sorry. I'll get to the euro dollar in a little bit. Another thing, you make trading look too simple. And I'm vulturing on the uninitiated. Well, guess what? Trading is simple. Trading is not this immaculate formula. It's really simple. All right? Creating a trading strategy is just a series of if-then thought processes, a series of rules that are testable, verifiable, and repeatable. It's really not that hard to create a strategy. It's really not that hard to backtest a strategy and see if it has a positive expectancy. Trading is simple. It's not easy. It's not easy, and that's when the psychology comes in hand. It's hard to do it through the different market conditions. It's hard to stay with your strategy and stick with it during a drawdown. It's hard not to take profits early. It's hard not to move stops back. But the actual learning, the skill of trading is not that hard. And that's what I want to explain to traders. I want you to be able to believe that you can do it. I don't think it's a disservice that I try to motivate traders out there. I think it's much better than me coming on camera and saying, guess what? You're not smart enough. You suck. You'll never be good. Don't try it. All right? Why would I knock you down like that? From someone that has no Ivy League education, that didn't study economics, didn't know anything about trading until he graduated college, that has worked his way from the ground up to become a professional trader. Why would I try to discourage anyone else from doing the same thing that I did? That's just stupid. I am here to motivate. I am here to tell you that you can do it. Trading is simple. You don't have to be this smart. You don't have to be a genius. It just takes discipline. That is what I'm here to do. I don't get that comment. It's just, again, guys, if you're gonna, and I apologize for that rant. We'll get onto the charts. it gets me heated because I try so hard. I try so hard over the years to not only get better as a trader, but to get better as an educator. I try so hard to make my teaching process as simple as possible so that everyone can follow it. I try to make it as Barney as possible, step by step by step by step, so that it's easy to pick up, so that more people can get involved in the trading. And to hear someone say that, Akil, that you're vulturing on these people, you're trying to steal their money or whatnot by doing this and setting them up for failure, that hurts. Because guess what? I don't have to teach. All right? I don't have to be an educator. I made the choice to teach. Right? I chose to teach because it's my way of giving back. I sleep a lot better at night knowing that, yes, I'm trading and I'm making money in the financial markets. Yes. But I'm also helping others achieve their dreams. I can easily go back to managing money. Easily. Probably be a little more stressful, but I can easily go back to managing money and make a lot more than I do teaching. But I don't get the same personal benefit from that. I wouldn't wake up with a smile on my face every day, know that I'm doing good in the world. So again, just think, man. Just think before you hit that send button, please, and do your homework first. I invite you to join me in the live room, please. Go to the website, www.tradingpower.com. Join me in the live room. Get to know me as a trader, and I think it'll switch your opinion around. So let's go over to the euro dollar. Let's get to some charts here. Speaking of trading is simple. Here, euro dollar. It's a perfect example. We just came off a big pattern euro dollar. A perfect example of how trading is simple, but not very easy. Now, euro dollar is coming off a bat pattern. We looked at this a few videos ago, where we're looking at an X leg starting up here at 115.35. X to A to B, B to C, CD completion. I think it was right up here, 14.14s, 14.10, somewhere around that area. CD completion, a bat pattern. It's simple. If-then thought process. If I find the impulse leg, then I wait for B retracement. If B retracement meets my rules, then I wait for C leg. If C leg meets my Fibonacci retracement rules, then I project the D completion to complete here. If then. It's really simple. When I first started off, I literally had a checklist for each of my patterns. I had a checklist that I printed out on my whiteboard or stuck it to the back wall behind me, and I would literally look at it and go, okay, B leg needs to be that, check, C leg, boom. And it's really as simple as that once you know the rules to trade it. And you can see this pattern rolled over very nicely. I think it was about, if I remember, close to 300 pips on target 1, 600 pips on target 2. Very simple strategy, right? Bat pattern completion. I know a trader overseas that he only trades bats and ciphers and makes a very, very comfortable living. Now, although it was simple, far from easy. And I had a great example. I spoke to a trader on Facebook who was trading this. He said, Akil, I got short the bat pattern. I think it was a day or two in, and the market was right about here. Oh, let me use a different line here. What do I want? The market was right about here. Boom, right at this yellow line. And he was talking to me. You can see he was going through some psychological issues. He's saying, okay, well, I'm up 100 pips, Akil. What do you think about me, rolling stops? And I was like, well, why would you do that? Well, because we're up 100 pips and I don't want the market to reverse without me. And I said, well, I don't think it would be a good idea. I think you should follow your rules and understand that you're involved in a daily pattern. This thing is going to take a while to complete. It's a position trade. You're going to need to be, psychologically tough and stick by it. And he's like, well, what if I take a little bit of profit out? Because in the past, I've been up a few pips and then the market has come back to stop me out, and I don't want that to happen again. And I'm like, well, you could do that, but then you're really sabotaging your trading. What you really should do is just stick with the trade. You have your stop set, you have your target set. Click the little minus button at the top right of your screen and just, don't worry about it. Check on it tomorrow. And this conversation went on for a while. He gave me a great story about his trading struggles. By the way, if you're watching this, you probably are. I hope you held this trade out. I hope you stuck with it. Um, but you can see, although the entry was pretty simple, the hard part is sticking with it. And this was a pain-free trade. This trade never really went into drawdown. We spiked up a little bit, but we never even tested our X leg. This thing essentially went straight down from completion, yet it's still hard. It's so hard to see being up 100 pips but not taking profit, being up 150 pips not taking profit. It's very difficult to do that, and that's where most traders fail. Again, sabotaging your system. For that trader, if he took himself out right here for 100 pips, yes, it's a party that day. It's a party. Take the girlfriend out to McDonald's, supersize the fries, extra cheese on the burger. It's a party, right? It's all great. 150 pips in the bag, yes. But then you come back the next week and you realize that, well, you left another 500 on the table. And what happens with that is when you take that next pattern on the daily chart, that's a loser, and say you get stopped out for 200 pips, guess what? Now you have one winner, you have one loser, you're down 100 pips because you sabotage yourself and took targets early instead of having one winner, one loser, and being up 400 pips. And that's where a lot of traders run into trouble. A lot of you guys listening out there that are stuck in that conscious incompetent stage, where you know what you're doing, but you can't quite get over that hurdle. That's the problem. You know how to trade. You know how to trade, but up here, you can't do it. See how I'm focusing on psychology again? See? I hope this is enough for you? Anyway, that is the problem that a lot of you guys are making. So you got to stick with these trades. You got to follow that plan, not only with execution, but you've got to see it out as the trade goes through. So finishing on euro dollar, let's talk about what's next. This has been a very interesting. It's been an interesting few weeks. I'm gonna load up a white chart here. I know you guys hate the black charts. It's been an interesting few weeks on euro. We've been actually making some pretty bold predictions. It's a very, I would say it's been a very dangerous week, and I say it because of this. Not only am I coming off about 2 weeks of drawdown, but I also have a very strong confirmation bias on what I think the euro dollar is going to do. And what I mean by confirmation bias is, no, I don't trade off fundamentals, but I do understand fundamentals. And I'm not the best at it. That is by far the weakest point of my trading. But I know how to put two and two together. And we had, I think it was the biggest CPI number or biggest CPI jump in 2 years. We add that to the fact that we know interest rate hikes are coming. We know that Yellen is saying, well, when they come is going to depend on the type of news we get out in the state of the economy. So you put two and two together, right? Interest rates coming out in the future. We see dollar strength. People want to get involved in the dollar. All right. We have good news coming out, and which is plays a big role in those interest rates and when they're going to be raised, people get more strength in the dollar. And I knew coming into the week, we're really at a condition where traders are just looking for an excuse to get long dollar. They're going to ignore any negative news because, again, it's they don't care. They just want an excuse to buy more. They're going to ignore any negative news, and any news that comes out at expectation or better than expectation, they're going to flood the market. So we can expect a lot of trend continuation moves. So this entire week in the live room in the syndicate, we've been trying to hop on these dollar moves. In fact, we hopped on a very good one on Canada. I didn't get greedy, but I tried to shoot for the moon with that. I left about 40 pips on the table. And I also got involved in the dollar yen trade probably about an hour or so ago. But we've been doing this with a lot of these dollar pairs, taking that confirmation bias, not letting it affect our trading. I would still get short the dollar if the opportunity came, but knowing that if I do have an opportunity to get long dollar, if I do have opportunity to get long the dollar, I may want to milk that for a little bit more than I normally would. And that's a trading decision that when you get experience, it's worth doing. You don't want to shoot for the stars all the time. You're going to get burnt more than you're going to get rewarded. But if you can nail these particular situations, you can have that extremely good trade that can make your trading week. And all it takes is one massive trade to make your week, one massive week to make your month, one massive trading month to make your trading year. Trust me. Again, you don't want to do it all the time. I'm not trying to relay that message, but if you can pinpoint when to do it and when not to do it, you can sometimes milk a little bit more profit out of the market than what you normally would. But let's look at euro dollar on the daily and let's make some predictions for, or let me show you guys what I'm looking at. So the question is, where is euro going to go next? We're seeing some relief right now. We came right down to the 108 even handle, which is what we projected earlier in the week. Just looking at the price chart right here, we're looking at 1, 2, 3, 4, 5, 6 bearish days in a row with one little bullish day right in here. So I'm going to take my box tool. If I had to project the level that the market's going to come back into, I'm going to take this level right here. You can see the wicks where the bulls try to make a push and they get rejected. Wouldn't be surprised if we saw that same type of move if we came up to this level. Also, if we take a look left, you'll see structure leaves clues. Not only do we have structure right here of this little dip, but we've got a structure level right here as well. And really, we can actually take a box here as two down at these wicks and say these are some kill zones where I would look to get short the euro dollar, try to hop on this trend in anticipation that we're going to head back down to 106s. Well, 107s first, a little bit above 107 first, 107.20s first, but eventually 106 is down there. So let's go down to a lower time frame. Let's do this first. Let's bring in let's go down to a lower time frame. Let's go down to an hourly chart. Get a I usually go 4 hour first, but I don't want to spend too much time on this video. I'm running about 15 minutes already. So let's go down to a lower time frame and throw some fibs on. Let's take a Fibonacci retracement from our swing high right here to our swing low. You can see I get a 382 right at the top of that zone, or right in the beginning of that zone we identified. I'll get a 618 a little bit higher. Let's see if we get any Fibonacci influence from this last swing high to swing low. All right, I'll get a 618 at this level. So if I just erase these boxes for a minute, I've got a 618 Fibonacci retracement. I've got a 382 Fibonacci retracement lining up right at the bottom of this structure zone. You can see we got a test, and a test right there at that structure zone. Also, if I look left, let's see if I remember right, look at that. Another test right here, boom. Another test right there, 2 tests, boom. And I thought we had some more. Oh, what is this? Download. Oh, I think my camera shut off. Oh well. Yep, looks like I lost battery. I'll come back later. Anyway, look at that. If I scroll back again, following that red line, we've got some more tests right here as well. Boom, boom, boom. So if I'm looking for the first shot that I can look to get short euro dollar, it's going to be right at this level right here, right at this 110, right at this 110.70 level. That's maybe not the first shot, but that's going to be the level that intrigues me the most. So expecting to see some relief up to that level. Now, obviously, that's a ways away. If you're looking for something more short term, we can do this. Let's take our Fibonacci's and see if we can get anything from this level as well. Let's take a Fibonacci extension of our last move, swing low to swing high, and back down. Let's take a Fibonacci inversion from this swing low to this swing high backwards. See what we get. Let's take one more inversion from this move, swing low to swing high backwards. Again, Fibonacci inversion. And see if we get any type of confluence. We have a little bit of confluence right here at the 110 even handle. And this is a psychological number. These psychological numbers often react like support and resistance. So I would say this: if you're looking for something more intraday, maybe something tomorrow, I doubt we're going to rally up here by the end of the week to this 110.60 level. I do think we could come to 110 before our trading week closes. I would certainly look at this 110 even handle. You have a little bit of structure right here to play stops above. It's not a lot. It's very, very minor structure. So I would use a more conservative entry technique to enter. I would not be aggressive right here. But this is the first level I would have my eye on for a potential short on the euro dollar. And then of course, if this is broken, the much better level, in my opinion, is going to be in this structure zone between 106.38 and or not 106, 110 110.63s. My eyes are killing me. 110.63s and this 112 112 even level, essentially. So 2 ideas for Euro. I know they're far, far away, but I did get a request to talk about, typically with my syndicate videos, I'm bringing up setups that are going to be completed in the next day or so. I did get a request in these weekend review videos, if I do discuss something, can I bring up something more long term? So intraday traders looking to trade Euro tomorrow, I would look in this level right here, this first little structure zone, this minor structure zone. Of course, use some filters, be very conservative with an entry approach, in my opinion. If you're a longer term trader, a 4-hour trader, maybe even a trader that trades off the daily chart, this bigger structure zone, in my opinion, is going to be a much better level somewhere in this zone. And you can easily, if you're looking to trade this back down, you can easily, even if you're at the bottom of the zone, you can easily get a pretty good, or at least a 1-to-1 risk reward without looking for the extension. So that's it this week, traders. I'm going to bid you farewell. If you liked what you see, again, this isn't a typical video. I apologize. I don't apologize for the rant earlier, but usually I don't go on one of those rants earlier. But again, this particular comment just got me fired up. But if you like what you see, do me a favor, hit that like button, hit that share button, hit that subscribe button. Make sure you check out the weekend review playlist. There are tons, if I go to my channel here, the weekend review playlist, there are tons of videos here, tons and tons of videos, my most popular uploads, weekend reviews from the past, and then some live trading room footage. And if you guys, if you want to see me trade live, if you are fond of the type of analysis I just showed you on the euro dollar, if you want to see how we do that on a daily basis, we call it doing reps in the gym, because we do it on lower time frames as well. If you want to see that, if you want to be a part of that, if you want to be part of what I consider the best live trading community out there, join me for a free week. Go over to our website. Go to www.tradeempowered.com. If I can find the website, tradeempowered.com. Head over to Forex Live Trading Room and check it out. Start a 1-week trial. Join me. If you like what you see, you're welcome to stay. If you go in there and it's not your cup of tea, then well, at least you got a week to talk with some other traders, and I guarantee you'll learn something in that week of trading. So if that wasn't pitchy enough for you, I'm not a pitch guy. We'll end it on that note. So until next time, traders, plan your trade, trade your plan. As always, if you have questions, leave a comment, shoot me an email, akil@tradeempowered.com, and I will see you next week. For you YouTube subscribers, live room members, and syndicate members, I will see you tomorrow, and hopefully we can end our week with a bang and get out of this drawdown. It's looking like we will, but I don't want to jinx it. So take care, guys, and have a great weekend.